Welcome back to Investing Talk Podcast. We've got a really interesting company to look at today, Hawaiian Electric Industries. You might know them as HE,
Yeah, most people associate them with the electricity in Hawaii.
but did you know they actually own a bank too?
It's true, they own American Savings Bank.
I think a lot of our listeners probably don't realize that.
Yeah, it's a pretty diverse company, actually.
So today's going to be Pat. We've got their upcoming earnings announcement, a potential sale of the bank, the whole renewable energy situation. Their stock's been up and down. A lot to talk about.
Definitely a dynamic situation.
And it's a company that's kind of in the spotlight right now, so let's jump right in.
Sounds good to me.
So first things first, as of February 19th, 2025.
That's today.
Today, HE is trading at, let me check here, $10.49 a share, down about 1.5% from yesterday.
Not a great start to the week for them.
But let's look at the bigger picture. What has their 52-week range looked like?
Well, they've been as low as 761 and as high as 1819 over the past year, so
Quite a swing.
yeah, you can see why there's so much talk about their volatility.
And I did notice something kind of interesting looking at the numbers today.
What's that?
The volume, the number of shares traded, it seems unusually low.
Oh, yeah, you're right.
What do you make of that?
Well, lower than average volume often indicates that investors are being cautious, maybe waiting to see how things play out before they make any big moves.
That makes sense, especially with that earnings announcement coming up.
Right, they're reporting after the market closes on the 21st, so just 2 days from now.
Big day.
Analysts are expecting earnings per share of 39 cents for the quarter.
Okay, so that's definitely a number to watch. Wouldn't you say this earnings call is extra important considering the challenges that Hawaiian Electric's been facing?
Absolutely. Their trailing 12-month earnings per share is actually negative 11.72 right now, and their price-to-earnings ratio is negative 0.9.
Whoa.
Yeah, not exactly inspiring confidence for investors, is it?
Can you break that down for our listeners who aren't, Wall Street experts? What do those numbers actually mean for someone thinking about investing in HE?
Basically, they've been losing money, and that's always a concern for potential investors.
Right, it raises questions about their financial stability.
Exactly.
So it sounds a little bit grim, but is there anything positive, anything working in Hawaiian Electric's favor right now?
Well, there are a few things. For one, they recently issued $558 million in equity, and that's given them a little more liquidity, a little more breathing room financially.
So that's a plus. And what about the potential sale of American Savings Bank? Could that be a game changer for them?
It could be if they sell a bank that could bring in a lot of cash, which they could then use to pay down debt, address those financial obligations we were just talking about, or even invest in their core utility operations.
So that's something to keep an eye on for sure. And let's talk about that utility business for a minute. They've been making some pretty noticeable moves in the renewable energy space, haven't they?
Yeah, they've been really active in transitioning to cleaner sources. Right now, 36% of their grid is powered by renewables.
Wow, that's impressive. But then they also recently decided to close that Shift and Save program,
Right.
which was supposed to encourage people to use electricity during off-peak hours. Doesn't that seem a little counterintuitive to their whole push for renewables?
Well, remember, Hawaii's energy situation is unique. They're an island chain so heavily dependent on imported fossil fuels.
Right.
So for Hawaiian Electric, moving towards renewables isn't just about being environmentally friendly.
Right.
It's about becoming energy independent. It's about controlling their costs in the long run.
I see.
They're really trying to become the leader in island-based renewable energy solutions, and that's a story that I think investors will find appealing. As for Shift and Save, the Public Utilities Commission is supposed to be giving guidance on future energy programs soon, so this might just be a temporary pause.
So maybe not as contradictory as it first seemed.
Exactly.
Okay, so their short-term financials might be a bit worrisome, but those long-term forecasts are painting a completely different picture, aren't they?
They really are.
What's driving that optimism, or is it just wishful thinking?
Well, I mean, the forecasts for HE in 2025, they average around 1640 with a high of 2659 and a low of a little over $6.
Wow, that's quite a range.
Yeah, and it gets even wilder when you look further out, like 2030, 2040, even 2050.
Okay, let's hear it. What are those predictions looking like?
So some forecasts have HE hitting 2079 by 2030, then plummeting to 81 and 2/3 cents by 2040, and then, get this, skyrocketing to 49.52 by 2050.
Okay, that's a lot of volatility. I'm not sure my stomach can handle that.
Yeah, those are some pretty wild swings.
What could possibly be causing such drastic fluctuations in those long-term predictions?
Well, it's a combination of things. The success of their strategic initiatives, the overall economic climate, what happens in the energy industry as a whole. I mean, trying to predict what's going to happen that far down the line is almost impossible.
So as they say, take those long-term predictions with a grain of salt. A big one.
Definitely.
Okay, but let's shift gears a little bit and talk about some technical indicators. What can those tell us about HE right now?
Well, looking at the moving averages, we're getting kind of mixed signals. The relative strength index is neutral, but the moving average convergence divergence, or AACD for short, is showing some bullish signs.
So for those of us who don't speak fluent technical analysis, could you translate that? What does it mean for someone who's thinking about investing in HE?
Essentially, it's pointing towards a whole recommendation at this point. It's not a strong buy, but it's not a screaming sell either.
Proceed with caution.
Exactly. Do your research.
Are there any key support and resistance levels that investors should be watching?
Yeah, it looks like there's support forming around the $10 mark and resistance around 1068. So a break above or below those levels could signal a more significant shift in momentum.
Okay, a lot to digest there, a lot to think about with Hawaiian Electric Industries. Let's take a quick break and then come back to tie it all together for our listeners. Welcome back to Investing Talk Podcast.
We've been digging into Hawaiian Electric Industries, ticker symbol HE.
And it's safe to say there's a lot to unpack here.
For sure.
So for our listeners out there who are trying to decide if HE is a company worth investing in, let's try to summarize what we've learned.
Okay, sounds good.
Starting with their financials, I mean, they're facing some pretty serious headwinds right now.
Yeah, no way around it. Those negative earnings, that negative PE ratio, those are definitely red flags.
But then you have the potential sale of American Savings Bank.
Right, which could bring in a lot of cash, potentially completely changing their financial picture.
So that's the big question, isn't it? Will they sell the bank? And if they do, what kind of price will they get?
Exactly. Those are crucial details.
And we can't forget about their commitment to renewable energy. I mean, they're already at 36% renewables in their grid, and that number is only going to go up.
While it's great to see them embracing renewables, we also have to remember that it's not a simple or easy path.
What do you mean?
Well, renewable energy technology is constantly evolving, the regulations are complex, and it requires a lot of investment upfront.
Right, it's not just flipping a switch.
Exactly.
We've also been talking about those long-term forecasts, which are all over the map, anything from less than $1 to almost $50 a share by 2050.
Yeah, those long-term predictions, they're interesting to think about, but I wouldn't put too much stock in them.
They're more like, thought experiments than reliable forecasts.
Exactly. There are just too many unknowns to make accurate predictions that far out.
So what does all this mean for our listeners who are actually trying to make investment decisions? What's the bottom line on HE?
Well, I'd say it's a classic high-risk, high-reward situation. There's definitely the potential for big gains, especially if they can overcome these current challenges.
But also the potential for big losses.
Right. This is not a stock for the faint of heart.
So if you're thinking about investing in HE, do your homework, research the company, look at their financials, read analyst reports, really understand the risks involved.
Absolutely.
And as always, we have to remind our listeners that we are not giving financial advice. Our goal is to give you the information and insights you need to make your own informed decisions.
Right. Decisions that fit your own personal financial goals and risk tolerance.
Now, here's a question I've been thinking about. Do you think HE can really pull this off? Will they overcome these obstacles and actually become a leader in the renewable energy space?
That's the million-dollar question, isn't it? Only time will tell.
But we'll definitely be watching closely and keeping our listeners updated on any major developments.
Absolutely.
Okay, and speaking of watching closely, let's go back to those technical indicators for a minute. You mentioned that the MACD is showing some bullish signs.
Right.
Can you explain what that actually means? What does a bullish MACD suggest to potential investors?
Sure. So the MACD is what we call a momentum indicator.
Okay.
It helps us identify potential buy and sell signals. And when it's bullish, that means the shorter-term moving average is crossing above the longer-term moving average, which could be a sign that the stock price is gaining momentum to the upside.
So not a guarantee, but a potentially positive sign for those who are bullish on HE.
Exactly, but it's important to remember that you should always consider the MACD alongside other technical indicators and your fundamental analysis.
Right, it's just one piece of the puzzle.
Exactly.
And since we're on the topic of technical analysis, are there any other indicators that our listeners should be paying attention to when they're evaluating HE?
Yeah, definitely keep an eye on the RSI, the Relative Strength Index.
What does that tell us?
Well, it measures the magnitude of recent price changes to kind of evaluate overbought or oversold conditions.
Okay.
It's a number between 0 and 100, and traditionally anything above 70 is considered overbought, and anything below 30 is considered oversold.
Got it.
So right now, HE's RSI is neutral, which basically means that there are no strong buy or sell signals based on recent price movement.
So the stock is in a balanced state, for now at least.
Right, but that can change quickly, so it's important to keep an eye on it.
Okay, good to know.
Yeah.
Now let's circle back to HE's renewable energy strategy for a bit. You mentioned earlier that Hawaii has a very unique energy landscape. Can you expand on that a bit and how it relates to HE's push for renewables?
Sure. So Hawaii imports most of its energy, actually, primarily in the form of petroleum.
Wow, so they're really dependent on outside sources.
They are, which makes them vulnerable to price fluctuations and even supply disruptions.
I see. So for Hawaiian Electric, transitioning to renewable energy isn't just about reducing their carbon footprint.
No, it's much bigger than that.
It's about energy independence. It's about security.
Exactly. By increasing their reliance on local sources like solar, wind, and geothermal, they can stabilize their energy costs and create a more sustainable future for Hawaii.
It's a pretty compelling story.
It is.
It sounds like their renewable energy strategy could be a major driver of their long-term growth and profitability.
It certainly has the potential, but it's a long and complex road ahead. There will be bumps along the way.
What kind of bumps?
Well, things like regulatory hurdles, the need to build new infrastructure, getting the public on board, those can all impact how quickly and successfully they make this transition.
It's never as easy as we hope it will be.
Unfortunately not.
Speaking of challenges, let's address the elephant in the room. HE has been under a lot of scrutiny lately, especially after the Maui wildfires.
Right, there have been allegations about their role in those fires, and there are investigations going on.
It's a sensitive topic for sure.
It is, and it's important to note that there haven't been any definitive conclusions yet. The situation is still unfolding.
Of course, but regardless of the outcome of those investigations, the damage to their reputation could be significant.
Yeah, that's definitely a concern.
How do you think this might affect their future prospects?
Well, the wildfires and all the attention they've brought have definitely impacted how the public sees HE.
Right, and that matters.
It does. It could lead to stricter regulations, potential lawsuits, and even investors losing confidence.
So this is yet another layer of risk that investors need to think about when they're considering HE.
Absolutely. Their long-term vision for renewable energy might be appealing, but this near-term uncertainty about the wildfire investigations adds a whole new level of complexity to the story.
It's a reminder that investing isn't just about charts and numbers.
Right.
It's about understanding the real-world challenges and risks that companies face.
It's about the big picture.
Exactly.
And speaking of the big picture, let's go back to HE's decision to close their Shift and Save program for a moment. You mentioned earlier that the Public Utilities Commission is supposed to be providing guidance on future energy programs soon.
Right.
Well, the closure of Shift and Save has raised some eyebrows. People are wondering if HE is really committed to those demand-side management programs.
Demand-side management, can you remind our listeners what that is?
Sure, those are the programs that encourage people to use less energy during peak hours.
Oh, right.
They're really important for creating a sustainable energy system.
Why is that?
Well, they help balance supply and demand, which means we don't need to build as many new power plants, and that lowers costs for everyone, both the utility companies and the customers.
So closing Shift and Save, could that be seen as a step backwards in terms of demand-side management?
It's hard to say for sure without knowing why they made that decision and what the Public Utilities Commission is going to say.
Right, we need more information.
Exactly. It's possible that they're just shifting their focus to different demand-side management programs, or maybe they're reevaluating their whole approach.
So something to keep an eye on.
Definitely, it could have implications for their future energy strategy.
Okay, and while we're waiting for more information, let's revisit those long-term forecasts again. I mean, those predictions, from less than $1 to almost $50 a share by 2050, it's a wild ride.
It really is, but it's important to remember that those are just projections. Trying to predict the future is always going to be uncertain, especially when you're looking decades ahead.
So instead of getting caught up in specific price targets, what should investors be focusing on?
Understanding the fundamentals, what's driving HE's performance, things like their progress in transitioning to renewables, how well they navigate the regulations, what happens with the wildfire investigations, and of course their overall financial health.
Those are the real indicators of whether they'll succeed or fail in the long run.
Exactly. And speaking of success or failure, let's talk about the potential sale of American Savings Bank for a minute. This could be a real turning point for HE, but it's a complex transaction with a lot of moving parts.
Can you break it down for us? What are the key things to consider? What are the potential implications?
Well, first and foremost, there's the sale price. How much can HE actually get for American Savings Bank? A higher price would obviously be better. It would give them more capital to address their financial challenges.
Makes sense, but finding a buyer willing to pay top dollar might not be easy, especially with the economy the way it is and all the uncertainty surrounding HE's future.
You're right, the pool of potential buyers might be small, and they might have to accept a lower price than they were hoping for.
So what else should investors be paying attention to besides the price tag?
The terms of the sale are important. Will it be all cash, or will it involve stock or other assets? The structure of the deal can have significant tax implications for both HE and their shareholders.
That's a good point. It's something that people often overlook.
They do, and they shouldn't. Investors need to carefully analyze those terms to understand how it might affect their own portfolios.
Okay, and beyond the price and the terms, what else matters?
how HE plans to use the money from the sale. Will they prioritize paying down debt, or will they reinvest it in their core utility operations, or maybe they'll use it to pursue new growth opportunities?
So the way they use the proceeds will tell us a lot about their priorities and their vision for the future?
Exactly.
Okay, so the potential sale of American Savings Bank, it's a potential upside for HE, but it's important to be realistic and consider all the angles.
I agree.
Now, let's take a step back and think about HE's overall investment thesis for a minute. What are the main arguments for and against investing in this company?
Okay, so on the positive side, they're in a good position to benefit from the growing demand for renewable energy in Hawaii. Their long-term vision for a sustainable energy future is attractive, and they have a decent track record of integrating renewables into their grid.
And as we've discussed, their push for renewables isn't just about being green, it's about energy independence and security for Hawaii.
Right, which are important goals.
And of course, there's the potential sale of American Savings Bank, which could give them the financial boost they need to strengthen their balance sheet and pursue new initiatives.
So there's a lot of potential upside.
There is, but on the flip side, they're facing some serious challenges. Their financial situation is shaky. There's the uncertainty surrounding the wildfire investigations, and transitioning to a fully renewable energy system is a complex undertaking.
It's not going to be easy.
And the closure of their Shift and Save program raises questions about their commitment to demand-side management, which is an important piece of a sustainable energy system.
Right, so there are definitely risks to consider.
So weighing it all out, HE seems like a high-risk, high-reward kind of investment.
It does.
Investors need to be honest with themselves about their risk tolerance and their investment goals before they jump in.
HE is not for everyone. You need to really understand the company, the industry, the challenges, and the opportunities before you invest.
Okay, so let's say someone is interested in renewable energy, but HE seems too risky for them, or maybe it just doesn't fit their investment strategy. What are some other options they could consider?
Well, there are plenty of other ways to get involved in the renewable energy sector. For example, you could look at some of the established players in the solar, wind, or geothermal industries.
Like who?
Companies like First Solar, Vestas Wind Systems, Ormat Technologies. They have solid track records and strong financials.
So a little less risky than HE.
Potentially, yeah. Another option is to look into exchange-traded funds or ETFs that focus on renewable energy.
What's the advantage of that?
ETFs give you diversified exposure to the sector, so you're not putting all your eggs in one basket.
Right, that spreads the risk out a bit.
Exactly. And then for those who are comfortable with more risk, there are always startups and emerging companies developing new and innovative renewable energy technologies.
So lots of options out there.
There are, but as always, do your research before you invest.
Good advice. Whether you choose HE or something else, the key is to make informed decisions that align with your own goals and your risk tolerance.
Couldn't have said it better myself.
Now, let's talk about staying informed. How can investors keep up with the latest developments with HE and the broader renewable energy sector?
That's a great question. Staying informed is crucial for successful investing. It allows you to adapt your strategy as needed.
Right, you need to be able to react to new information.
Exactly. There are a lot of great resources out there. You can follow industry publications like Renewable Energy World, PV Magazine, Wind Power Monthly. They provide in-depth coverage of the latest trends, technologies, and policy changes.
So you can really stay on top of what's happening in the industry.
You can also follow the financial news for updates on HE specifically, things like their earnings announcements and any other major events that might affect the company.
And of course, there are always the financial websites and platforms for real-time stock quotes, analyst ratings, all that good stuff.
By staying informed and keeping an eye on your investments, you're giving yourself the best chance of success.
So let me ask you this. Is it too late to invest in HE?
It's a tough one. There's no easy answer.
I figured.
It really depends on your individual goals, your risk tolerance, and how you see HE's long-term prospects. If you believe in their vision for renewable energy and you're willing to accept the risks, there might still be an opportunity.
But if you're looking for a quick buck or you're not comfortable with the level of uncertainty surrounding HE, maybe it's better to look elsewhere.
Exactly.
It's all about having a long-term perspective and knowing what you want to achieve.
And speaking of long-term perspective, let's talk about some key metrics that investors should be looking at when they're evaluating HE.
Metrics, those are the numbers that give us insight into a company's financial health, how well they're performing, how they're valued.
Right. They can help us make better decisions.
So what should we be paying attention to with HE?
Well, one important metric is their debt-to-equity ratio. This tells us how much of their assets are financed by debt compared to equity.
So basically, how much they've borrowed versus how much they own.
Exactly. And a high debt-to-equity ratio can be a warning sign. It might mean they're relying too heavily on borrowing and could be at risk of financial trouble.
Got it. What else?
Another key metric is their return on equity, or ROE. This measures their profitability, basically, how much profit they're making for each dollar of shareholder equity.
So the higher the ROE, the better.
Generally speaking, yes, a higher ROE usually means they're more profitable and using their shareholder capital efficiently.
Okay, and what about their price-to-earnings ratio? We hear that one thrown around a lot.
Yeah, the PE ratio, that's an important one too. It compares the company's stock price to their earnings per share.
So it gives us a sense of how the market values the company relative to their earnings.
Right. A high PE ratio could mean that investors are expecting big earnings growth in the future, while a low PE ratio might suggest that the company is undervalued.
But you always have to look at these metrics in context, right?
Absolutely. Consider things like industry averages and the company's specific situation.
Don't just focus on one number in isolation.
Exactly.
Okay, so we've been talking a lot about HE, but let's zoom out for a minute and talk about the bigger picture. What does HE's transition to renewable energy mean for Hawaii as a whole?
Well, it's a huge shift, not just for HE, but for the entire state.
Why is that?
It has the potential to create new jobs, boost the economy, and make Hawaii less reliant on those imported fossil fuels we were talking about earlier.
So it's a positive thing overall.
It could be, but it's not without its challenges. They'll need to upgrade their infrastructure, train their workforce, and address any concerns from the community.
It's a big undertaking.
It is. It's going to require a lot of collaboration between the government, businesses, and the people of Hawaii.
So it's not just HE's responsibility, it's a shared effort.
Exactly.
And what role does regulation play in all of this?
Regulation is crucial for shaping the energy landscape. It provides incentives, sets targets, and helps ensure a fair and competitive market.
So the government has a big part to play.
They do, and here in Hawaii, the Public Utilities Commission has been really proactive in pushing for renewable energy.
What have they done?
Well, they've implemented things like renewable portfolio standards, which basically require utility companies to generate a certain percentage of their electricity from renewable sources.
So that's helped drive HE's progress in integrating renewables?
It has, but the regulatory landscape is constantly changing, so any new policies could have a big impact on HE's strategy and their financial performance.
So investors need to pay attention to what's happening on the regulatory front.
Absolutely.
And what about technology? How might technological advancements affect HE's future?
Well, the renewable energy sector is always innovating. There are new technologies and breakthroughs happening all the time.
What kind of things?
Things like improvements in solar panel efficiency, better battery storage, smart grid technologies, all of these can impact HE's operations and their costs.
So they need to stay ahead of the curve.
They do. If they want to remain competitive and achieve their goals, they need to be at the forefront of these advancements.
And what about the people, the communities that HE serves? How important is community engagement in this whole transition to renewable energy?
It's essential. You can't just force these changes on people. You need to build public acceptance and support, especially for large-scale infrastructure projects like this.
So what does that look like in practice?
Well, ATE needs to be transparent about their plans, address any concerns that people have, and make sure that the benefits of renewable energy are shared fairly.
So building trust is key.
It is. If they can engage with the community and build those relationships, it will make the transition smoother and ensure long-term support for their initiatives.
It makes sense.
Yeah.
Okay, so as we wrap up our discussion on HE, let's try to answer one final question. What does the future hold for this company?
Well, their future is closely tied to the future of energy in Hawaii.
Right, they're not operating in a vacuum.
Exactly. Their success depends on a lot of things: how well they execute their renewable energy strategy, how they handle the regulatory challenges, whether they can recover from the damage caused by the wildfire investigations.
It's a complicated path with a lot of unknowns.
It is, but there's also a lot of potential both for HE and for Hawaii as a whole.
So investors need to carefully weigh the risks and the opportunities before they make any decisions.
Thorough research, a long-term perspective, and a clear understanding of your investment goals, those are the keys to navigating the complexities of this company and the dynamic world of renewable energy.
You know, as we've been talking about Hawaiian Electric Industries, ticker symbol HE, I've been thinking,
What's that?
we've covered so much. Financials, the big renewable energy plans, those wild long-term forecasts, the wildfire situation.
Right.
But I feel like we've missed something, a really crucial aspect of this company.
I wonder if you're thinking about the same thing I am, the human element.
Yes,
It's
Exactly.
easy to get lost in the numbers, the data, the charts.
But we can't forget that there are real people behind all of this.
Real people whose lives are directly affected by the decisions that HE
We're
makes.
talking about their employees, their customers, the communities they serve, all those families relying on HE for electricity, the businesses that depend on them for a stable and affordable energy supply. They all have a stake in whether HE succeeds or fails.
And of course, we can't forget the people of Maui who are still dealing with the aftermath of those terrible wildfires.
That's right, HE's role in that tragedy and their efforts to rebuild trust and make sure the community is safe, that's going to play a huge role in their future.
It's a powerful reminder that our investment decisions have real-world consequences.
It's not just about making money.
No, it's about making choices that align with our values, choices that contribute to a better world.
So as we wrap up our conversation about Hawaiian Electric Industries, I want to leave our listeners with this thought. Investing is about more than just maximizing profits. It's about supporting companies that are doing the right things, companies that are making a positive impact.
I couldn't agree more. We encourage all of you to do your research, really think about what's important to you, and make investment decisions that you can feel good about.
And that's it for this episode of Investing Talk Podcast. Thank you so much for joining us on this deep dive into Hawaiian Electric Industries. We hope you found it valuable.
We always appreciate your support. And remember, don't forget to subscribe to the podcast, leave us a comment with your thoughts on HE or any other companies you'd like us to cover, and share this episode with anyone who might be interested.
Until next time, happy investing.